Yo, what's up guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a quick look at a couple EV stocks that I think are going to do well. I've got one in particular though that I am super excited about. I think it is very under the radar and will be huge moving forward. So let's not waste any time. Let's jump right in. All right, guys, before we get started today, subscribe to the channel, hit that bell notification so you can stay up to date. I try to post new videos every day with like growth stocks, penny stocks, market news, really anything I think can help us become better investors and grow our portfolios. There's a link down in the description to my Patreon account. Come join the family over there. I'd love to have you. I was doing the first 100 patrons for just $1, but I decided to drop it down to the first 50. And it's filling up quick. I mean, we've probably got 15 spots left. So if you want to help us grow the channel and be part of the community, we would love to have you. You'll get access to the private Discord where we talk stocks, links to 4 different portfolios so you can see exactly what I invest into. That anytime I buy or sell a stock up to the second I do it, you'll get a notification so you can follow along with that. So anytime I enter a swing trade or a crypto trade, you can check that out. I'm also going to start sending out a watch list every Sunday. And then I've got a price target channel so you can, check out our short-term and long-term price targets on our place. So if that's something you want to be a part of, you want to come join the family, we would all love to have you. I do want to say real quick, thank you so much to my current patrons. I love you more than anything. You have no idea how much your support means to me. We just blew past 600 subscribers. So again, thank you guys. I love you all. But let's get started, guys. Let's not waste any time. I got 3 for you today. One I've already talked about multiple times, GIK Capital 3. Then I just want to touch on IDEX. That's a stock that I own. I think it's going to do well. And then we're going to spend a lot of time on the third one. Real quick, I just wanted to show you this. So they reported full year 2020 earnings, IDEX, Ideanomics. They did $26.8 million in overall revenue, where $19.5 million of that was EV revenue. That was up more than 600% from last year. They're pretty much a holdings company, a lot like ALPP, the other stock we own, the drone company. They've got 2 main parts of their business. They've got a fintech side, then they've got the EV side. They pretty much have a bunch of acquisitions, a bunch of companies that they own that do EV stuff in all different aspects of it, and then fintech as well. I'm not going to spend a lot of time on this, guys. I'll probably make another video in the next few days where I go way more in depth. So if that's something you want to see, let me know, and I'll for sure do that. Real quick, I just wanted to show you the 2020 revenue includes the company's first sales of charging and battery systems. IDEX expects charging systems revenue to grow as the Wave inductive charging business acquired in January starts showing up in financials this quarter. So that's big, guys. I'm just going to show you their business segments and then we'll move on. But real quick from their CEO, he said, "We are very pleased with the transformation that took place in the past year. Despite a year highlighted by COVID-19, we were able to build the groundwork for 2021 and beyond for Ideanomics, and we are excited for what the future holds with our recent activity across the EV ecosystem and developments in EV charging infrastructure." So that's what I'm bullish on is their EV side. I like the fintech side too, but the EV is much better. So this right here, guys, you've got to worry about a couple things here with this stock. I mean, it's risky stock. It's a penny stock. I mean, back in like November and October, it was like 80 cents, and then it went up to like $5, and now it's like under $3. But this is the Wave is one of their businesses. It's a wireless EV charging for big vehicles like buses, heavy duty vehicles. You just pull over the top of it and, it charges them. So that's really cool. Not a lot. I don't think any really other of the EV charging companies are doing that. They've got Medici, which is their big vans and buses. They're going to have 6 big EV type vehicles. Their biggest catalyst or, thing is that they're going to be cheaper, 15 to 20% cheaper than all of the competitors. So that's nice. What I like though is these ones down here. You've got the moped, the electric moped, business that they own where, out in Malaysia and China and all those other countries, mopeds are huge. One of the biggest ways that people, get around out there. So this is big. I like this. They've got the high performance motorcycle, company as well. Electric motorcycles, very cool. And then the tractor one. I like the tractor one a lot. I don't think anybody's doing electric tractors. So for, agriculture, commercial and recreational use. So a lot of cool stuff here. And then they've got their fintech. These are their fintech companies. Again, I'm not going to touch very far into it. It's just a fintech app for real estate, mortgages, things like that. So real quick, let's take a look at the chart. I do like this stock. I do think it's going to do well. I do own quite a bit of shares of it. I really like this, that it gives you exposure to the EV industry in charging, in vehicles, in energy, so they've got a lot of opportunity in that regards. As you can see, like I said, back here in like November, the stock was like around 90 cents. Then it gapped clear up, went up here and reached a high of almost $5, sold off, ran clear up, hit a high of $5.53, and just got absolutely hammered the last like 8 weeks. So it did come down and touch a low of like $2.43. Since then has came back up to this $3.16 range. It did gap up a few times on the positive, full year earnings. Again, guys, this stock will be volatile. If you don't already own it, go do your research on it. I will make a more in-depth video. I just wanted to bring it to you now because I think it's going to continue to move, in the right direction over the course of the next few weeks and months. I do think that this stock will get up over or around the previous high around the $5 mark. I saw a video of a YouTuber yesterday say that his short-term price target's $10. That's a little out there, but I do think the stock will do well. If I was to put a price target, I would have to say, previous high by the end of the year, but we'll just have to wait and see. I do think it will do well, though, so I wanted to bring it to you now, just put it on your radar. Next one I just want to briefly touch on is GIK Capital 3. You guys know that I love this stock, one of my favorite, one of my biggest holdings. They are one of the leaders in their industry for the like buses and vans for the electric vehicles. They did that. They, had that deal with DHL where they gave them 100 more vans. They just did, or maybe that was Fluid. Anyways, they just did a deal with DHL and Fluid for their electric vans. I've done multiple videos on this stock, so I'll link it above so you can check it out and see me go much further in depth. But the reason why I keep bringing this up, guys, is because you need to put it on your radar. I mean, down here at $10.70 is incredible for this stock because this is another one that I think is a little under the radar and just hasn't really got the exposure yet. When you start looking at like valuations and where the stock's trading at in regards to earnings and revenue and things like that, I think this stock and this company is one of the most well-positioned stocks out of any of the other EV companies doing the same thing as these guys are. I think eventually they will, get that exposure and do very well. They are, the merger's getting ready to be completed. I think we're voting on it like right now, and it should be, completed pretty soon. But guys, if you don't own this stock, definitely go check it out. It's one of my favorite. I think it is giving you the most, I don't want to say low risk, but one of the lower risk ones out of the EV stocks in like the electric vans and vehicles, class 3 to class 6 vehicles. So you can see here, it went clear up here to a high of like almost $17, and then down here at 10, you've got like a ton of opportunity back up to the upside. And I think it will go much further than that by the end of 2022. My price target's up around $35 to $40 by then. All right. So now for the stock that I want to spend the most time on. This is NUV, N-U-V-V-E. This was recently a SPAC. It is now merged. The merger's done. They changed the ticker. Guys, this stock right here, they're an EV charging company, but they are the inventors of V2G, vehicle to grid technology. As you can see here, the vehicle to or V2G concept, renewable energy sources need storage. Electric vehicles have built-in energy storage systems. Vehicle-to-grid technology bridges the gap between these two sectors and also helps regulate energy on the grid. Guys, the reason why I'm so pumped on this stock that I just recently found it. You look at these companies like Blink, ChargePoint, all these other EV charging companies, and they are trading at ridiculous valuations, which is fine. They're growth companies. I get it. But the way that these guys have this V2G technology that none of these other companies have, they've got patents on it. It's going to create a huge barrier to entry to do what these guys do. With renewable energy, solar, wind, whatever it is, the issue is not having enough power, right? And so these guys are creating that bi-directional charging system that lets you decharge your battery and send your energy out to the grid for them to utilize in other areas. So it creates reoccurring revenue, you get a faster ROI because they pay you for you to give them back your energy. There's actually been studies to show that by having the battery be charged and decharged, it actually helps improve the battery life, which was a big concern that it would ruin the battery, but it doesn't. So you can see here, this kind of shows you power generators, transmission systems, and consumers. So this is how it works. So you plug in your car, you charge your battery, and then you make money by providing power capacity and sending energy back and forth to regulate the grid. Or it helps you save cost by using the stored energy from the batteries to reduce your building energy. So it'll save you on utilities, or it'll help you make money. So the way I look at it, guys, is say you're you own a bus company, because that's what they're going into is like school buses right now. And say you've got 50 different buses, and they sit there throughout the day. They run in the morning, they run at night, and then in summer they just sit there. Well, you can invest into this technology, electrify all of your buses, and then while they're just sitting there, you hook them up and they all link together and kick their energy back into the power grid. So then you can send your energy out, and they've got the technology that sends signals when they need it, or when they need more energy and stuff like that. And so you get your ROI back faster. You get a return on your investment way faster because it's actually bringing you money rather than just electrifying your stuff and getting the benefits of like fuel consumption and stuff like that. Then when you're ready to drive, with the charge you set for the day with advanced trip planning using a mobile fleet management app. So they also know when you're going to drive around, so that every time you come to your vehicle, it's ready to rock. It's not like the charge is gone. Real quick on this stuff. So they've got high-powered bidirectional charging stations. Our high-capacity bidirectional AC and DC chargers allow for charging and discharging of the EV battery according to the instructions that the vehicle smart link receives from the aggregation platform, all within safe battery warranty limits. Then they've got the NVVE Energy Regulation Aggregator. Owned and operated by NVVE, our cloud-connected application ensures that every vehicle on the platform has enough charge for the next trip before calculating how much capacity is available to sell back to the grid. Then our Vehicle Smart Link software and device enables an EV to receive instructions from the NVVE aggregation server in order to control and regulate the battery charging and discharging, and helps predict travel time and distances to ensure proper charge levels. So the technology is essentially seeing, okay, there's this much energy that we are not going to use, and so we can kick it back out to the grid and get paid for that. Their use cases are fleet vehicle services, so rental car companies that the cars that are not rented out, they're just sitting there. Homeowners to save on their utilities. Multi-unit dwelling. So you've got an apartment complex with 1,000 units, and you're just literally using everybody's car there to make money when they're not using their vehicle. Smart city centers, and then like I said, like bus companies, and there's a ton of different use cases out there that they can use for this. So real quick, let's jump into the investor presentation. This just kind of, touches on the stuff we already touched on. Electric vehicles go from being unreliable resources into reliable, dispatchable, and monetizable assets. It helps stabilize the grid, enables increased renewable penetration, optimizes and protects the batteries, guarantees vehicles will be ready for use, and then reduces ownership and cost and gets you a faster ROI. Now, this is what I like right here, is the first mover advantage. Guys, they've got intellectual property. They've got patents. It is going to create a very challenging penetration. It's going to create a moat. Not every company can just jump in and start doing this bi-directional charging because they invented it. They have the patents on it. Difficult for competitors to perform without violating their IP. And then it is a long path for distributed resources and aggregators to be qualified by TSO, anywhere from 12 to 36 months. So they've got a huge head start on any company that can do it without violating their patent, because it takes them so long to be able to get, approved or checked off. Then they've got experience. They've done a 4-year use case in Denmark anywhere already, where they've shown that they're generating on average like $2,400 per vehicle per year, which is great. They're already qualified, which makes expansion easier. So they're already qualified in multiple states and countries. They've got 10 years of experience, and they've got a ton of data with their technology that they use. Let's see. Okay. Now, the revenue is actually, so from 2020 to 2021, they are projected to see a 550% increase in their revenue. I think that they're projected to do about, I think it's like 5 to 6 million in 2020, and then like 32 million in 2021. They're going to also have a 70% profit margin in 2020. Out of that, 5 million to 6 million, they'll do around 3.5 million in gross profit. These guys are not profitable yet. They are not making money, which most EV charging companies are not either. But if you look at it in the sense of they are projected to be profitable in 2021, that's why I see a long position, because I don't own the stock yet, but I am definitely adding it. It had a huge day yesterday, so I'm going to try to wait for a pullback, but I am absolutely adding this stock. Like I was saying, so they're not profitable till 2021, which that's pretty soon. Right now, their compounded annual growth rate for revenue, they're projecting to be 312% higher than ChargePoint or Blink. Now, this was a pro forma valuation. This was back when the stock was at $10. This was made back in like November or something. But still, even at current share prices, their valuation is much lower than ChargePoint and Blink. So I'm going to kind of give you my price target on these guys once we kind of take a look at revenue. So they are projected to finish up the year, because they've already done, this was back in November. They already did like right around 3 million back in November. They're projected to finish 2020 at anywhere from 5 to 6 million. And then they will lose around 3.2 million to 3 million overall in net income. It'll be a loss. Now, look at this revenue growth. In 2021, projected to scale it like 5 to 6 times, or 5 to 5.5 times to 32 million, and then triple it again to 93 million in 2022. So guys, that's your risk right there. Those are big projections. If they miss revenue, the stock's going to sell off tremendously. The other risk is the EV charging industry is brutally competitive. And so if they, miss on any revenue, if they, don't roll out into different states, or they miss any type of news is wrong, you will see the stock sell off, in my opinion. Now, the other risk that you face is shareholder lockup, just like with any merger. At the 6-month mark, the internal shareholders can sell off half of their shares if the stock's over $12.50, which it is. And then at the full year mark, they can sell everything. So you do miss, or you do, face, sell off with the lockup period, but that's with every, SPAC merger. So, now real quick, I do want to give you my price target and look at the chart. So right now they are trading, if we look at 2020, revenue. So like, let's just say they do, 5.5 million, right in the middle of 5 to 6 million in 2020. That puts them trading at around 7 times 2022 earnings or revenue. Now, if you look at 2021 at the 32 million, excuse me, the price target would be $24. That would put them trading right at 7 times revenue. And then out to 2022 with the 93 million, $37 would put them trading at 7 times revenue. So I would put a price target by the end of 2021 to be up here around the $22 mark, $23 mark, where they had a previous high of. The end of 2022, middle of 2022, that $35 to $37 range is where I would see it being, but you never know. This company is very overlooked right now. It is not. If you look at Blink Charging, they're trading at like $40 a share right now, and they are barely going to do any more revenue than these guys did in 2020, and then barely any more in 2021. Actually, I think they might even do less in 2021. I can't remember. But if you go look at Blink, their valuations are ridiculous. They're insane. And they do not have bidirectional charging. They don't have the patents that these guys have. So I am extremely bullish on this stock. Again, guys, if you see here, came out, gapped up, ran all the way up the first day it gapped to $22.74, and then gapped clear down here. And closed at opened at 1740, closed at 1730, sold off, tried to come up, sold off, came up, kind of stayed in this consolidation range a little bit up and down, and then got sold, started selling off pretty bad right here at the end of February, March. Sold clear off down here to $9.91 at a low, and then yesterday, look at this, up 27% just yesterday. So big movement there. So it did jump up, clear up. It's sitting at like 1286 right now. Guys, that's a great price. I mean, obviously we want to get it, as low as we possibly can, but it looks like you'll have a little bit of support right here at like the 1250 range. Even the wicks are $12 range. It looks like they've got some support there. You might run into a little bit of resistance right here at like the $15 range. I use the gaps a lot for support and resistance, but overall, guys, this is my favorite EV charging company I have seen to date. You guys know that I'm not a huge fan of ChargePoint. The stock's been running like crazy lately, but I'm just not a huge fan of it. I don't like the fundamentals. I think it's overhyped. This is my favorite EV charging company. I am going to add it, and I'm going to hold it because I think it's got a lot of opportunity, and it is going to kill it in the coming years. So go do your research on this. I will put the investor presentation down below so you can check that out. I just wanted to bring this to you guys today. I'm super excited about it. This video is for entertainment purposes only. Always do your own research and due diligence. I am not a licensed stockbroker. Don't just take my word for it. If you want to come join us at the Patreon, we would love to have you. Thank you all to my subscribers and supporters. I love you more than anything. Let me know down in the comments what you think. If you've got a price target on, this stock, or if you like this stock, or if you got any other EV charging companies that you like, let me know. I'd love to talk with you about it. And I'll see you guys in the next one. Peace.